Hey guys, hey Matt.
Hey, John.
Well, welcome everybody. Thank you for taking some time here this Tuesday afternoon, wherever you are, to listen in on what your book of business is worth. Um, really looking forward to it. I got my really good friend Matt Nohl joining us today. Hey Matt.
Hey, everybody.
So for those of you that don't know Matt works with Access Capital. We're business partners. We're both part of Integrity Marketing Group. And Matt, we've been working together on these book buys now for about a little over 3 years, isn't it?
Yeah, give or take. I'd say it seems like it was just yesterday, but yeah, I
I,
think you're right.
I know, I
It's
know.
time
So
flies.
anyway, yeah. Okay, really quick. This is putting you on the spot. Do you know how many books that we've bought since we teamed up with you guys?
No, off the spot.
I
Like
just I just counted before we got on here. It's 40.
40.
We're right at 40. Yeah. So
Not
anyway,
bad.
guys, kind of what we're going to do today is we've got a few kind of high level bullet points to go through about your book. And this is going to be super conversational. So very relaxed. We're going to stay on track, but just chime in if you have questions, put them in there while you're thinking about it, and we'll just take a break and hit them. And we really want this to be helpful, informative, um, and beneficial for all of you. So we'll just jump in and go here and get started, huh, Matt?
Yeah, let's go for it.
So anyway, first one, reasons to sell your book. I mean, I guess everybody is different, but for the most part, and I'll let Matt talk about this too, on our side, most of the books that we have bought have been from agents that are ready to retire, that they've kind of come down to that stage in their life where they're ready to move on to, onto something else. And this stage of their career, of their life, is they're ready to end it. They don't have a succession plan. They don't have a kid in the business or somebody in their organization that would be in a position to take it over. And so it just makes sense if they can find somebody that will give them a good value for their book and then also take good care of their customers, then it's a logical fit. So, and that's 90% of the books that we've bought have been that way. Matt, I'll let you address it from your side, though. I know prior to us teaming up together, you guys bought lots and lots of books for a lot of different reasons. So if you want to just hit them with a few of those for the
Yeah,
heck of
yeah. So everybody, Matt Nohl, Director of Operations at Access Capital. Like John was saying, we became part of the Integrity platform back in 2021, and that's when I got the opportunity to meet Mr. John Hockaday. And
it.
now we've been, like he said, I talk to John multiple times a day. And just, we essentially have partnered up. We take a look at books of business from agents that come to him that are looking to either uh, retire, want to maybe take some chips off the table, um, whatever it really is. And so we're kind of that piece for New Horizons to value the book of business. We know how to transfer all of the policies over and just make everything kind of a smooth transition.
Yeah.
Um, I guess going back to kind of before Integrity and now, prior to Integrity, we were essentially buying books of business from agents that needed capital for whatever reason. Most of the time, could be related to debt or uh, maybe some sort of tax issue or whatever. It really didn't matter.
Right.
And since coming onto the Integrity platform, it's opened up an entirely different channel essentially where we're working more and more with agents that have built up over their careers books of business that there's not really an easy way to slow it down, especially in the Medicare Advantage space. And so that's pretty much where our focus has changed to, but we're still buying, a book of business here, a book of business there from agents that, need to want to pay their house off or something like that. But we're also very focused on working with the retiring agent.
Yeah.
group.
Yeah. Some guys too might want to sell a part of their book for capital, like you said, maybe to reinvest back into their business. And that happens too. But like we said, for the most part, and I bet most of the people that are on here that are kind of thinking about this, I would guess that most of them are there because they're kind of thinking, at some point I'm ready to be done, and what am I going to do with this valuable book that I've built? So anyway, a lot of reasons out there, and we hope you find one that makes sense for you, and we put something together. So let's go to the next one. What do you need to get a valuation? So Matt, help them out with that. Just tell them what they need and what we can help them get what you need to have to give them a good appraisal, a good valuation of what their book is worth.
Right. So this is like the fundamental piece, and it sounds more complicated than it is, but the way that we value these books is we do it on a policy by policy basis. So we'll essentially value every policy that's in your book of business. If you have multiple carriers, we'll put essentially a individual policy valuation for every policy. That sounds like overkill maybe, but it's really, we figured out a way to make it pretty simple. And by that, the way that we do that is really getting access to your last 12 months of commission statements. From those statements, we're able to get policy information of all the policies that have paid over the last 12 months, which should, if there's any monthly or quarterly, semi-annual, annual policies, they all should have paid over that 12-month period. Mm-hmm. And that's what we use to essentially build out an in-force current list of policies, which then we can run through our actuarial model. So the most important thing that we really need, and more, the more valuations we do, the more data we have from those valuations to apply. So really that's the big piece, is the last 12 months of statements, or access to the agent portals. Before we would exchange any information, we for sure would sign a confidentiality agreement. That's for you to know that any data that you provide to us is for valuation purposes only. And then from there, if you want to pull the statements down, that's totally fine, or we can help you with that as well.
Yeah, I guess, my experience has been most people think it's really like a hard process on the seller's end, and it's not. Just like you said, we're just looking for those user ID and passwords, and we can do it for you. Or if you're able to do it yourself, it's pretty painless and pretty quick on how we can come up with that written offer for you and give you a good value for your book. So you got anything else you need to say on that, Matt, on that?
Well, yeah, I guess just to build on that, that's really the only piece, other than if we come to terms on a deal, there's an agreement that's sent that needs signing. But really the only work that agents have to do to get a valuation and through the whole process is to provide the commission data, either statements or logins, and then sign the paperwork, and then we take care of the rest. Yeah, it's pretty easy, pretty quick usually. So, all right, I think that's enough on that one. Let's keep moving. You kind of touched on this really, on how do you value a book of business. Is there just on that subject though, what stands out to you as to what makes a book have more value or less value? Let's say it's a Med Sub book, it's a Med Advantage book. What are some of the things that you look at that say, God, this book is really going to have a higher value or a lesser value because of X? Yeah, so the obvious answer is remaining commission on a policy. And so it really breaks down to product type and duration of the policy. So with Med Advantage, those are typically level commissions. Usually the older the policy gets, typically the more likely it is to stick at that level commission. We haven't seen changes happening as much once policies haven't been on the books for 4 or 5 years, until in our actuarial model, mortality does start to kick in at some point. But so that's one piece. The second piece, like on a med sup, for example, are the commission drop downs that can affect the price or the value of that specific policy. So if there's a policy that's in its third duration and it pays level commission or higher commission through year 6, it's going to hit that commission waterfall in year 7. Like that's all that all plays into the value of that policy or future value of that policy. So from the med sub side, typically the earlier or the newer the policy, the more value it would have. And on the Med Advantage side, it's kind of a little not backwards, but a little bit more based on duration and age of the client.
Yeah. Most of the books that we bought are heavy Med Sup, Med Advantage, for sure. But we get some ancillary business in there, some dental, some cancer, heart attack, stroke, sometimes final expense. What other, because I don't know who all's on this call, but what other, besides Med Sup and Med Advantage, other things are you seeing or that you're valuing and, add value to the book?
Yeah. So going back to when we started, Access Capital was really founded as with the idea of buying commissions from long-term care agents. That's what we used to do. And we did it for a long time. We bought a lot of long-term care renewals, and those don't exist really anymore, or
Don't seem to.
we don't see too many of them.
Uh-huh.
So really what we value or purchase is anything that's individually underwritten and guaranteed renewable outside of MA and PDP and DSNPs and everything. So we buy books of final expense all the time, long-term care, whole life, term life, if it has a renewal component to it. Sometimes some UL books. Again, those can be a little complicated, but we have bought some in the past.
Yeah.
And if we can't really place a value on annuities too much, because typically they don't pay a renewal. But if there is a renewal piece to an annuity, we can buy those as well.
Yeah. Yeah. On that, I know we've bought a few books that the seller had a pretty nice size or quite a few annuity customers, which to us, those have great, great value. We love the annuity business. We're real comfortable in it. And what we've done is we've kind of worked out a side deal. We can't give them any upfront money for that annuity piece, but like I said, we still realize there's a lot of value in it, and we can work something out that we can take over that customer. And when that annuity matures, if we can rewrite it, then we'll have in the schedule how we're going to compensate that seller for it, because we want that business. We're not going to walk away from it, even though we can't give any upfront money for it. But hey, I think we got a question here.
Yeah. What about ACA? Do you buy those books?
Matt, I'm glad he brought that up. Is that Dan?
Yeah.
Dan, hey, Dan, go ahead. Matt, hit that one head on.
Yes and no, maybe.
Perfect. Perfect.
It kind of depends. What from our experience, the way to move. So let me take a step back. When we're buying books of business through our typical product types, we'll submit an agent of record change to a carrier, where that entire book of business the agent of record is transferred on that whole book. ACA is its own animal, where typically the agent of record can only be done on a policy by policy basis, and it has to have essentially sign off from
The insured.
the insured as well.
Yeah.
And so there are some carriers where it's kind of intermixed with Medicare books as well, where they can do a batch AOR or agent of record change. And we have bought some in the past. The nice thing about kind of how our setup is that if it makes sense, we can get a little bit creative on our approach. So if there's a way that we can figure out to move the business where we don't put it at risk of, falling off, and we can make sure that we're, can take care of those clients post transaction, then we can talk about it. But I think it's kind of on a case by case basis at this
Okay,
point.
so yeah, so just like on that, Dan, or anybody out there that has an ACA book and you think that might be a possibility, just reach out and we can just chat about it and bring Matt in and see if there's maybe a fit there or not. But it's not like the Medicare books, which are primarily what we buy. Those are cut and dry, and we're real aggressive on trying to get those. Okay, let's try another one here. What affects the value? You kind of talked on that already.
Yeah, we touched
really.
on that a little bit. And I can touch on it just a little bit more, but really it's from the Medicare standpoint, it's commission schedules. So how much commission is left at what rate, especially on the med sup side. And then just the duration of Medicare Advantage policies, and if we foresee any market changes or anything based on carriers.
Yeah. Does D-SNP Advantage product compare to just a traditional Med Advantage product? Do you look at those differently, or it seems like more and more of the books that we're buying have at least some D-SNP in it.
Yeah, so Med Advantage is going to have a higher value, just because of, there's two pieces: the volatility of the D-SNP, and I guess the big component that kind of applies to all policies is that when John and New Horizons buy a book, they're also taking over the servicing of those clients going forward. And as you guys all know, D-SNPs are pretty service heavy, and there is cost associated with that service post acquisition from New Horizons side. So there's a little bit, it's not drastic, but the advantage is usually going to be typically from a purchase price standpoint, a little bit higher.
Yeah. We've got a couple questions here.
Yeah, Chris asks, typically how many MedSup MAPD cases should an agent have on the books to think about selling their practice?
I can address that one. I mean, I don't think there is a number. We've bought some really significantly small books, and then we bought some really large ones, and everything in between. So where we are right now, I don't really look at that. We've got one right now on a lady that's a very small book that I think we're going to buy, and but it's a good book. You can tell she cares about her customers. That means a lot to us because, like Matt alluded to or said, our model is when we buy a book, we take all those customers and we run them here from Illinois, Central Illinois, as an agency. So that we'll assign them an agent that's here in our office, and they'll be involved in those people as much as we can be involved with. So, I don't know.
When you say small book, what are we talking
Well,
about?
like this one is only 53 customers. So it's not very big.
Well, and I mean, I can speak just like outside, just in our history, we've done $2,000 deals and we've done $5 million deals. So there's a pretty big range. And so, I mean, if it's like a policy or one policy or 4 policies and 4 carriers, it might be worth just holding on to that. But I mean, that doesn't mean we wouldn't necessarily not look at it either. So there's really no minimum or maximum on our end.
Yeah. What else we got?
Okay, another one, do we broker deals between agents?
What's that? I don't know what that means. Do you know what that means, Matt?
I think he's saying, do you help facilitate uh, one agent selling a book to another agent? And we
Oh,
currently no, we don't.
Okay, Jalen asks, will the value of DSNP LIS be more comparable to traditional MAPD moving forward with quarterly SEPs going away next year for dual and LIS?
It's funny you bring that up. We were actually kind of just talking with the um, people at Integrity about that, and not we're still kind of trying to figure that out exactly. To be honest, there are, I think, there is possibly an opportunity for those to be a little bit quote unquote stickier and less service heavy. And so if that's the case, then yeah, it would trend more towards the value of what an traditional MA would be.
okay,
But we should know more on that here soon.
okay.
Okay, is there an average multiple we pay?
Yeah,
That's you, Matt.
yeah. So in one of our founders name's Dave Emerton, and he's like, we don't put multiples on business, because we really don't. But that's really what comes out at the end of us doing evaluation, and it's a way to communicate, where we're at on a purchase price. And so we do a evaluation and get to a current value for that future commission stream. And typically it's product type related. So MedSup or MedAdvantage would typically fall within a range based on annualized renewal, somewhere between 1.75 to 2.25 times the annualized renewal. If you're talking about like final expense, whole life, you'd be somewhere in the neighborhood of maybe 2 to 2.5 times renewal. Long-term care would be somewhere in between 3.5 to 5 times the renewal.
Yeah, I would say, yeah, in my mind, I know all the ones that we've bought with you guys, it all falls right around to maybe just a smidge under 2 to I think the most that we paid was 2.4.
Yeah, well, you know what we should do, John, is we have that calculator that we
Yeah.
built.
We got that, don't we, Jason?
Yeah. Yeah, we'll
Yeah,
send
so-
that in the follow-up email that comes out after
Okay,
this.
good.
Yeah, so there's a tool that you can essentially put in what your monthly renewals are for each product type, and it'll give you a range of where that or where that purchase offer would fall in.
Okay, we got a few more here and we'll keep rolling.
All right, Ellen asks, does the agent do all the servicing of the clients or is someone else involved?
Well, if you're talking about us specifically, we have a team here. So what we normally do on a book is we'll assign it to one agent. Now, it doesn't mean that he doesn't have somebody else that's going to help him in our office, because we have a team of people, but we'll have one person that is the point for that book is typically what we do. So I think that's what you're getting at, Ellen.
Yeah, and if he's asking, is servicing, if they sell a book, do they still have to service? The answer to that's no.
No.
We take over all we'll
Yeah.
buy the book, we buy the future commissions, and then we
Right.
take over that servicing component.
Yeah. Any more?
Okay, Chris, I think you can get a rough answer to your question about valuation. We'll send out that tool after the webinar, and you can plug in your numbers and try that out, or just give us a call. But does your appraisal consider persistency rates in addition to mortality?
Yes. Yep. So we have what is it, 2024? So we were founded in 2007. So we have some historical experience with buying books. So we essentially have been able to build out the whole point of doing this is to maximize how much we can pay to buy a book. And so we've kind of over time, established how these books of business that we buy persist. And so we have historic lapse assumptions that we use based on duration of the policy, product type, age, or product type, and then we apply mortality assumptions as well on top of that. So it's pretty similar to how an insurance company would price products when they're developing them. But our lapse assumptions are usually, pretty close to what they would use for pricing as well.
I should just keep coming.
Yeah, should we move on and come back to these?
Yeah, let's do, just because I got a couple more slides I want to make sure we hit, and then we'll do some more Q&A here at the end. That way people, I want to be respectful of everybody's time. Let's skip this one, Matt. I think you've already hit everything on that,
Yep.
That's an advantage. Here's the thing I wanted to kind of talk about a little bit. This, I'm going to say it's kind of a new retweaked model where you sell your book and you stay in the game. And I really like this. And I think it's going to be attractive, kind of resonate with a lot of other people going forward. I feel like, I don't want to say we perfected it, but we just did one this way a couple months ago. In fact, we did an interview with the agent, the seller, his name's John Nepper. Can everybody get that easy, Jason? Could you send that
we'll
too?
send that in email as well. It's on our blog very recently, but yeah.
Can you do
we'll get
that?
out.
I think guys would like it. It's like an 11-minute video. I think it'll really be helpful. We'll include that after this, but here's kind of the thought process on it. Can you hit that page, please?
Yep.
So, okay, why this way? So I put psychologically, first of all, that I think it's as much for me as anybody. So I'm turning 65 next month. So I might be calling out to a couple of you guys to see if I could buy a med sup, but my thought is, or my point is how much my own thinking has changed in the last few years. I can remember just 10 years ago, Kirk Sarf here in our office, who heads up our life and annuity stuff. We've been together forever. And I can remember me and Kirk talking and saying, hey, I'm in this until I'm 76. As long as my health is good, everything's going good. I don't ever want to be done. And we would just say, yeah, he was the same way. We're just going to stay in it till we're 76. Well, I'm going to be 65 now, and I can tell you, I don't think that way now. I just don't. And it's not like I'm thinking I'm going to get out soon, but it's definitely different. And I don't have a timeline personally, kind of in my back of my mind. I'm thinking 2, 3, 4 years, maybe. Maybe it's till I'm 70. I don't know. I still love it. I love the people here that I work with, all of that. But it's definitely different. And as I think you guys will resonate with you, we all start thinking that way. But the kind of the scary part for me is what would I do? I'm a guy that's got to be busy. I don't want to just, I want to be busy. I want to be feeling like I'm productive. So that whole thing of like just retiring and just having it a hard stop is kind of psychologically tough, And that's why this way that like what John Nepper did, I think really helps that point where, like what he did, he sold us his entire book. He had a beautiful book, about 400 customers, and John's 80 and still really, really active, still sells a lot of business. But that 400 customers was a weight on his back, just taking care of them, servicing them, communicating with them. And it became that it was way, way more than his ability to get out and sell. And he never could be at leisure because he always felt like he had to be doing something. So when we bought his book and took that off of his shoulders, and yet he's still in the game. So technically what we did was we bought his book. All of those customers came over to us. We reappointed him where he got a new writing number, picked up all the carriers that he wanted. He's not taking any kind of a commission haircut. He's making the same commission he's always made, but we're running his commissions through us, paying them back to him. And the reason we're doing it that way is because if something happens to John, let's say he died, or he became incapacitated, he couldn't work, we can still have an agreement with his wife and his beneficiaries on this new book that he's building, how we're going to treat them and how we're going to be able to succeed his business. We'll take it in and give them a value for these new policies that he's building. And what it does for him is it makes it way more leisurely, that he can just sell when he wants to sell. He gets some referrals. He has no pressure. He has nobody on top of him saying, you got to sell X amount every month. It's nothing like that. And it's a super win for us. He's a great agent. He cares. He knows what he's doing. He's still going to build another, as long as his health stays good, he's still going to build another nice little book in the next 2 or 3 years. And when he really is ready to be done, we'll buy that back from him. But in the meantime, if something happened where he was not in business anymore, we can take care of his wife and make sure that she gets paid the value that she's deserving on this new book that he's doing. Guys, and that is especially important on the MA side, because everybody knows on the MA front, if you don't recertify every year, you don't get paid your renewals anymore. And I don't know if you've thought about this, but there's no AHIP certification from the grave. You just don't recertify. So this is a way that we can kind of get around that, pay him for all the new business he puts on the book at the same level he's always been paid. But when he's ready to be done, we're going to be able to step in and pay his beneficiary the value that's due them. So I kind of smashed all 4 of those points together in there, but that's kind of it on sell and stay in the game. You want to throw anything out there on that, Matt?
Yeah, well, I think the important piece, and I can talk to that, and then also just some things that I've seen in the last couple of years, but you're essentially sheltering that asset by, if you were to assign the book to you guys and then start New Horizons passes through those commissions, they're essentially putting them under the roof in case something happens, which is
exactly
kind of leading into my next point of we've over the last 2 or 3 years, we've run into this a few times where, like, for example, there was one agent that was tragically killed in a car accident. His wife was like from Ukraine or something and like didn't speak English, was not going to be able to get certified or even licensed to sell insurance. And when we went to the carriers to try and get the books transferred, they found out that he had passed away and they immediately terminated his contract, and those commissions were gone, 100% gone.
Yep.
And so what me and John have, like, we talk about this all the time, is trying to, and I think this is the simplest way to do it, is getting it set up to where, because like on supplement or any other health, all that stuff, there's a beneficiary on those contracts, but on MA,
right, there's not.
There's just a huge exposure there, and so just that we definitely be mindful that that's a very real thing, and the carriers will definitely lean on their agreement that they have.
I think it's great. Now you got to have some trust in us, right? You just do. We'd already thinking it all the way through. We'd already bought the book. Like if we did this with you, somebody out there that's listening. So you trusted us enough to do this deal, but then going forward, your commissions are going to roll through us. We have an agreement how we're going to pay you, but they're protected then. And so I don't know, I like it. I've started bringing it up now. We've got another book right now that I think we're gonna get this week on a guy. He's a guy in his mid-70s, and he was like, "Oh yeah, that's what I want to do. I want to stay in it if I can, and this is a way we can do it. We just reappoint him and run the stuff through us, and makes sense." So, all right, let's answer some questions, and we'll wrap it up here.
Okay, Joe asks, are there any customer retention requirements to the agent selling the business?
You want to talk about the holdback, Matt?
Yeah, well, I mean, there's typically our deal structures 80% at closing, 20% after the next AEP. There's no retention requirement tied to that since we are taking over servicing. That's our responsibility. We shouldn't have any persistency requirements if we're the ones that are affecting persistency one way or the other.
Right.
The reason for the holdback is if there's any issues with the carriers where part of the book doesn't transfer or
Right.
it's rare, but we
It
haven't
happens
seen it happen
though.
too often.
It happens. Or there might be a debt that we didn't know about on the book. I mean, normally if there's an advanced debt or there's a debt on the book, Matt's team finds out about it up front and it's, it's taken care of them. But yeah, it has nothing to do with persistency or even let's say it was an MA book and part of this book, the carrier terminated and they're not going to be in business the next year in that county. Has no bearing on this holdback. It's really just like I tell people, if you got a bad agent out there and we do this deal and then 2 months later we find out they're out there rolling these customers that we just bought, well, that holdback keeps a little skin in the game for them. But I've never had that happen with the group that we do or the group that we've bought from, sold to.
Okay, Mike, going back to the DSNP conversation, what if that DSNP member has been with the agent for 3 to 4 or more years?
Yeah, so that would just apply back to we essentially have a lapse table that we use where over time those lapses get smaller. So from year to year, and so duration of a policy is always going to be a benefit to the persistency from our experience, and then so that only helps the value of it. It's hard to, it's not necessarily apples to apples. It's just all dependent on the carrier, the age of the client, and the duration of the policy itself.
Okay, Betty asks, so if I sell my book of business, is there a non-compete clause and for how long?
So the only non-compete that we have in our agreement is for the policies we're buying. And that's kind of the one of the main benefits, I'd say, of our agreement in general. Our agreement's very agent friendly. We can certainly talk about, there's some tax advantages as well, which maybe we can get into on another discussion. But really what we're buying is what is the non-compete. Agents are not unallowed from getting a new agent number and writing new business, new policies, building up a new book. Hopefully, if they're happy with the experience they had, then down the road we'll buy that book from you as well. It's simply tied to, we have a list of policies in this agreement that we're buying, and we're gonna, going forward, service those clients. Those commissions are also what we're acquiring. So that's really, to that point, that's pretty much all of what any non-compete would cover.
Right.
Okay, Jalen asks, do you guys do 5149 deals as well, where the agent still owns the lion's share and is still invested in the growth of the business moving forward with higher multiples, as opposed to just outright sells for the MAPD?
No, not really. Again, I think, John, we've gotten creative on some stuff, but typically we try and the beauty of our arrangement is that we were able to have this structure where we can do these deals very efficiently in a certain way. Obviously, if it makes sense, we might be able to consider it, but typically we stick with our, just buyout structure, and then New Horizons looping in the, setting up something for new business going forward could be an option in that point or at that point. And so, but typically we just kind of stick to the one set structure.
Okay, Mike was asking about selling and staying in the game. I think he posted that right before we discussed that. So Mike, if you have any more follow-ups after that, please let us know. Also, do you guys track that a client has been with me for multiple years, but maybe switched carriers throughout the years? Would that be identified as low retention, or do you consider that as a retained client for multiple years?
Yeah, so when we do the valuation, we'll try and get 12 months is the minimum of what we use to value, but the more information we have, the better. And so we can essentially try and go as far back as we can to see, just because we know that policies move around from carrier to carrier, and so we really just want to get the best picture that we can. And so the more information we have, the better the higher multiple at the end on that specific policy would be.
Okay, great. Hey, we got one more slide here. Timing, now or later. So I'll take a stab at this and then Matt just jump in, but kind of where we are right now in this buying cycle is really from the end of January through the end of August is the time that we buy these books. So like right now, I've got 3 or 4 that are in the pipe that we're working on. We still have time to pick up a few more, but we really have to have the process started no later than August 15th, don't we, Matt? Before, you know, in order to close out before the blackout period gets here. And so that's kind of really one of the main reasons why we wanted to do another one of these, is just to let people know, hey, if you're kicking the tires, you're kind of thinking, yeah, I might not want to do this again. I'm hearing all the disruption talk that's, you know, supposed to be happening this coming AEP. I'm not sure I want to run through that. Well, if that's the case, we really need to get on it and get your book valued, get it appraised, see if it makes sense, if it's a good fit. We still got time, but you can't call us on September the 10th and say, I don't want to do this year. Can you buy my book? We're not going to be able to. So,
right.
You know, and there's no, you know, there's nothing to getting this thing valued, getting your book valued. It might take a week or so to get it, you know, get us your credentials, let Matt and his team value the book, and then we'll sit down and talk about it and see if it makes sense. And if it does, we got time to get it done this year. Or you might say, you know what, I'm gonna wait another year or two before I do this. That's fine. We just thought we better give a shout out before we got any closer to the end of the year here.
Yeah, in one piece, or I guess 2 points. So typically that John kind of alluded to it, that we have it's pretty much a carrier imposed blackout period, where specifically with MA, where we can't buy books of Medicare business between September and February of the following year. And that's because the carriers won't do agent of record transfers. And so we're kind of stuck there. But
yeah.
so if you decide, you know, now's not the time, then we'll pick back up in February, and that's where we could take another look at it.
Yeah.
And then another piece, we don't charge for valuations. So if you want us to take a look at it now, and you know, decide you want to do another AP, that's totally fine. And then the nice thing is that we would have done a lot of the heavy lifting on the first valuation. So really just, you know, seeing what happened to the book over AP, taking out lapses, adding new policies, getting you a new offer. So I wanted to throw that out there.
That is right. We got one more.
Yeah, Chris asked, would you consider buying a book of business that I have with another FMO?
Sure. Absolutely.
Does the FMO pay is the question. Do they pay the commissions, or are the commissions paid by the carrier?
Yeah. He's asking if you're a direct writer where your commissions come from the carrier, not through your upline, which is important. The commissions need to be coming from the carrier.
If the FMO is with integrity
Yeah,
and the commissions are paid by the FMO, we can do that
right.
typically. If it's outside of integrity, usually not, but there might be some cases where we can. I would say about 99% of the time now, though.
Right. You're sounding more and more like a salesman, Matt, over there.
No,
Yeah, but no, just if
because
you,
I've been talking to you too much.
I guess, guys, I really appreciate, gosh, it went maybe a little long, but hopefully that was helpful. Just call. If you got any questions, call me. I'll be glad to talk to you. We can get Matt on the phone. If we need some, more information and expertise, he's right here with us. So, but yeah, appreciate you all. Hope you have a great rest of your day, great rest of your week, and let us know how we can help. Thanks, guys.